So the stock market rallied on Monday after we found out that the US was going to attack and basically start a war with Iran. The market took off. Now, today we see the exact opposite, and global markets are at a free fall. And I don't mean free fall as a good thing. So let's dive in and discuss the top 5 stories that moved the markets today. And then we'll break down and discuss some of the top gainers and the movers for March 3rd, 2026. As always, read over disclaimer. I'm not a professional. Anything you hear in this video, please do your own research. I am not a professional. All right, y'all, so let's dive into it. I will say February was pretty rocky for me, and I haven't really been doing too much as far as long-term trading, but options I've been adding into leap options and holding those strong, but some of my kind of swing trades have not been going well. Now, if I was a day trader, I would have been great. I've picked some great stocks, and one day, like yesterday, I entered a gold call on Friday, and Monday it took off, was up about 20% or so. And then today, gold sold off. I think it was multiple things, but I did read today that the dollar surged today, and the dollar surging can kind of be for lack of a better word, kind of like pins falling at the bowling alley, and it kind of things head in the wrong direction on top of the dollar moving higher. And gold, unfortunately, was caught up in the middle of that. So that contract went from up 20% to down over 20%. And it was a short-term call, so I ended up getting out of it and took a loss on it. So I've been saying it, I am not messing with options unless I'm doing long-term leaps, probably for a good few months until maybe at least May, because there's too much volatility with me. I don't want to live like that. I'm not a day trader, and this market is not about to turn me into a day trader. I'm not doing it. So let's go over some of the things that we can identify and that I am sure of, and we'll discuss that as far as long-term investing, and hopefully I'll get my confidence back up and get back into options. But let's go over the scoreboards, and we'll look over the 3 major indexes. First, let's go over the VIX. So anytime the VIX spikes above 20, that means the market is more than likely very fearful and in a downturn. So if you have anything as far as short-term contracts, or if you're holding anything short-term as far as a trade, it could be under assault right now. So just be mindful. Make sure you're always aware of where the VIX is. It's kind of inverse relationship to the market. If the VIX is up high and it's spiking, more than likely the market is down. And we'll see exactly that is the case. If you want to just kind of look year to date, you'll kind of see those spikes of 20. If you want to look at it, usually coincide with the market tanking. Now, they don't typically stay elevated. As you can kind of see, it's 20 on January 20th, and then we're down to 15 on the 22nd. February 5th, we're at just under 22. And then February 9th, we're down to 17. But we've been kind of elevated, this 20 or higher for quite some time, as you can see here. But those spikes like 25 or more, they don't happen very often. Last time we got a spike this high was back in November. It was at about 26. Okay, we did see, like I said, February 5th, we did see a spike about 22. But these spikes above 20 probably aren't going to happen that often. So hopefully, but we are in wartime now, so it could stay elevated. We'll discuss some of the reasons why it could stay elevated in just a moment here after we look at some of the top 5 stories that moved the market today. So I just wanted to be mindful of that before we get into anything. S&P 500 opened today at 6,800. Went all the way down to 6,710, but closed today at 6816. Still down just under 1% for the S&P 500. The Nasdaq closed down 1%, just over. It opened today at 22,292 and closed at 22,516. So we're well off. Well, I shouldn't say well off, but we're off of the lows that we hit today, and the Dow down over 0.75%, down 0.83%. Open today at 48,493 and closed at 48,501. And while we're at it, we'll just talk about gold, like I just discussed. I got kind of kicked in the face with a swing trade for gold. Previous close was at 490. I think we got up about 494 or so on Monday. Then it went a little bit lower. Kind of got overbought a little bit. And then we opened today at 472.83. And we closed at actually below the open, looks like at 468.14. It did fight back a little bit. It got back up to or maybe right at the open, it got at 473.19, but closed at 468.14. It does look like in after hours it did spike up just under 1%. But when I looked this morning, before I went to sleep, actually, so more so last night, it looks like GLD was actually going to have a nice day. Then this morning we got news, a plethora of news that we'll discuss in a minute. And then we just got that aggressive sell-off in the futures pre-market. And we really didn't bounce back. We did bounce off of those lows of the day, but not anything significantly. Before we talk about individual stocks, let's just look over some of the research that I did. Now, I did this on Claude. I've been using Google Gemini, but I decided to just migrate over to Claude. My name is Claude, so it just makes sense. But Claude released a new model, and I'm liking what I'm seeing so far. So I basically asked the model to give us the top 5 stories that moved the market, not just in the US, but globally. And then we'll take a look at the top 5 gainers and losers for each major index. Okay, so we're on day 4 of the US-Iran war. We definitely saw a roller coaster session like we did discuss, escalating geopolitical tensions in the Middle East, which triggered that sell-off this morning. Dow plunged more than 1,200 points, but staged a little bit of a comeback. So what really impacted that? Well, drones hit the U.S. Embassy in Riyadh. I probably butchered that. The State Department ordered evacuations at the facilities in Bahrain, Iraq, and in Jordan. Hezbollah attacked Tel Aviv, and Trump said the conflict would continue for another 4 weeks, potentially. I know some of his banter and what he's been saying is kind of contradicting some of his other members in his administration. It would be nice if everyone's consistent, but I think he's bounced around saying this could be something in that short term. They're not expecting anything long term, and now he's saying up to potentially 4 weeks. So the markets did recover, like we said, after Trump pledged the U.S. Navy would escort tankers from the Strait of Hormuz, posting, quote, "No matter what, the United States will ensure the free flow of energy to the world." And I think what really maybe spooked the markets was the closing of the Strait, and a lot of the oil and I think a lot of the other trading aspects really moved through that Strait of Hormuz. So closing that down can really be impactful. And if this is supposed to be something that is extended to a month or more, that can definitely impact the market. So that could be the reason why we sold off. Maybe on Monday, the information that we're getting was the U.S. Along with Israel was really attacking Iran, and they really weren't fighting back, and they were kind of being obliterated. We know U.S. and Israel, their attacks killed some of the leaders of Iran, and maybe that was kind of some of the Trump supporters coming in and just saying, yes, we're going to win this war. This is going to be a very short battle, but that might not be the case, and maybe now that's why we saw the turnaround on Tuesday. To be quite honest, I'm not really understanding how it goes from Monday the markets are soaring, and then Tuesday, just one day, it completely flips the script. I think there's a lot of things that's going on. Maybe not everything we're going to discuss here is really going to tell that complete story. So I think that's really important why we listen to the news and really get understanding what's going on. But for me, as far as long-term investing, I haven't really done anything with that. As far as a long-term approach, because this isn't going to last forever. But as far as options, if anything's like as far as swing trading, unless you're doing puts today, I'm just staying on the sidelines. And because I've been whipped around way too much the beginning of this year, it's going to be hard for me to fight back this year. But only time will tell. Kind of been through this last year. I feel like last year was a little bit worse. I'm not sure why I'm really kind of like kicking myself as much as I am this year, because the moves really haven't been that substantial. But it is what it is. So I'm just going to focus on long-term investing and not so much in trading right now. And then we'll talk about some of those long-term investments that I have. Some of them aren't doing that well, but they're rebounding, and some of them are doing pretty decent, but did see a pullback today. All right, moving on to number 2. This is another reason why we probably saw that big decline in the markets today, in the prices of oil, in the Strait of Hormuz, those closure fears. So oil prices moved higher as we entered the 4th day of this battle and spread across the region. And investors fearing that the reported closure of the strait would lead to energy supply disruption. So WTI crude rose more than 8% to $77, while Brent gained nearly 8% to $83, just under $84. WTI oil prices are now up roughly 10% from last week, with both oil and LNG tanker traffic being disrupted by attacks on energy infrastructure. So it looks like Iran has a plan. If they can't, attack the U.S. and allies directly, they're finding other ways to impact United States and the world. 3 global markets all closed red. Kind of the thing where we discussed. Equity markets finished lower on Tuesday after rebounding from a steeper intraday pullback. Asian and European markets also ended down. The U.S. dollar strengthened against major currencies as investors sought the stability of the world's reserve currency. And all 11 S&P 500 sectors ended in the red, with materials, industrials, and healthcare among the worst performers. And if you've been following the market, industrials have actually been performing one of the best out of all the sectors this year, and healthcare was actually doing pretty well as well. So it looks like we're seeing profit taking, some heavy profit taking, and maybe there's some aspects of margin calls taking place. So people are selling their winners in order to kind of fund their trades. I'm not going to spend too much on this, but Target earnings, another retail miss. Walmart's definitely doing pretty well, but they had disappointing guidance the prior week. And Target's woes are just continuing to pile on quarter after quarter. Blackstone hit with 1.7 billion in outflows. Blackstone fell 3.8% as reports of 1.7 billion in net outflows from its private credit fund fueled sector-wide jitters. That news rattled confidence across the alternative asset management space, raising broader questions about liquidity in private markets. All right, so let's move to the biggest gainers and losers today by index. So looking at the Dow, IBM, Verizon, and Salesforce were the biggest movers as far as gainers for the day, whereas Caterpillar, Nike, and Boeing were the biggest losers for the day. S&P 500, we saw defense stocks like Lockheed Martin and NOC, Norfolk, something like that, I think is the name of that company. Those moves were 5% and 6%. Energy stocks like your Exxon and your Chevron moved higher as we saw a surge in oil. And AeroVironment moved up 10% today as far as the gainers, whereas the S&P 500 losers were Albemarle, Newmont, and Freeport-McMoRan. NASDAQ gainers, we saw Credo Technology, IBM, and Salesforce, and the losers were your tech companies and as well as Blackstone. Tesla and Nvidia were some of the biggest losers as far as the NASDAQ. All right, let's look at some of the individual companies that I watch on the daily. Meta actually finished positive. That's interesting to see. Not by much, closed up 0.23%, but it was positive. Robinhood was down, but Bitcoin actually didn't take the dip like you were expecting to see. I'll look at it right now, and this will be through Robinhood. Bitcoin is at 68,200 and just call it 50, 68,250. We did see Bitcoin almost hit 70,000 yesterday, or it touched it, and then kind of it's like a supply zone or a resistance level, so it kind of fell lower from that 70K mark. But as the market substantially moved higher, Bitcoin actually did not do that bad today. As of right now, it's actually still positive by 0.4, let's just call it 0.45, 0.5%, half percent for the day. So not bad. So if you are following Robinhood, you're definitely following Bitcoin, because Bitcoin rises, Robinhood more than likely is rising. And they kind of bucked the trend today. Maybe it's because Robinhood has been moving higher as of recently. Past 5 days, it's up just under 4%. But for the month, it's definitely down just under 13%. Apple was down. Uber. Now, this is a company that has actually been doing well. It finished today positive, just over 0.5%. When we look at it, past 5 days, it is up, let's call it 7%. Now, the past month is actually down 2%. And year to date, it is down just under 7%, 6.5%. But that 5-day rally of 7% is nice to see, especially for a company that I'm expecting to rebound. Is kind of like it was actually not kind of, it was one of my top picks for 2026. So it's good to see, even when the market is lower, Uber is starting to move higher. Vertiv Holdings has had a hell of a year. It's up 50% year to date, but we did see a pullback today of 5%. It's to be expected. It was running hot, and past 5 days is down almost 3.5%, but past month is actually up 28%. So good to see. Amazon finished higher. I did not notice that. That was good to see. Netflix has been on a tear. I'm really sick because I was going to get option contract. It would say like last Tuesday, before the news came out that they were going to drop out of his acquisition of Warner Brothers Discovery as Paramount upped their bid. and right before then, it was around $78 or so, $75, and I was going to do a long-term leap to 2028, and the thing took off, went up about 5%, 6% or so. It had to have been news. People had known that Paramount was going to raise their bid or something. I don't know. I'm just being a conspiracy theorist right now because I am. But it really, really ticked me off because I could have got it in then around maybe around 85, $90. And I decided to wait to see if it was going to pull back anymore. Nope, it just pushed higher because later in that week we did see that Netflix dropped out of its of the bidding portion for Warner Brothers Discovery and just let Paramount basically win. And so we'll see what happens with that. But Netflix is, I'm glad I didn't get rid of it out of my portfolio altogether. There's been a lot of people that I watched on CNBC and such saying they're getting rid of Netflix because they didn't think there was going to be a positive year. Well, you've got to have a little bit more patience in this game. Netflix is still the number one streamer, regardless of what's going to happen with Paramount. That's going to be years before they probably do anything with that, if they do anything, and they're going to be taking on a lot of debt. And I think Netflix is going to get back into hopefully their growth form and find other means to grow the company rather than a major acquisition. Take-Two has been actually doing pretty good. I bought this in the weakness in February. Grand Theft Auto is going to be coming out later this year, and that is going to drive a lot of revenue for their business. Past 5 days is up just under 6.5%. Past month is up 2%. So good to see there. And DraftKings. Now this one, I've been getting kicked in the mouth. I've been buying this thing and buying it as it falls and falls and falls and falls. I really don't think investors really they definitely don't have patience for this company. All they really care about is prediction markets. But DraftKings has a history of, they started with just fantasy sports, and then when they got into sports betting, a lot of people thought there was no way that they were going to become anything substantial or significant, or as far as taking market share, because there's so many sports books out there. Well, they're arguably number one, if not number two, to FanDuel in sports betting. And so I think that they're going to become a leader of predictions markets. It's just a matter of time. They have launched, or excuse me, they are preparing to launch an app that encompasses everything all at once: the casino, the fantasy sports, the sports books, and the prediction markets in all one app. So regardless of where you are located, you'll be able to jump in and access whatever is available in your state. So that's good. They'll probably bring down some of the costs it takes to build out what they're looking for in the future. They just had their investor day. They provided some information on that, the total addressable market in terms of 2030, where they see prediction markets and the rest of their business growing towards. And they also, as well, are being able to launch in a new state in Arkansas. DraftKings is going to actually partner with, it's not too far from me, 30 minutes from me, a casino is called Southland in Arkansas, right over the border, Tennessee, right next door to basically Memphis. Right over the border, they'll be able to do some sports betting at that casino moving forward. So that's just another state that they onboarded. Plus now they're essentially in all states now with prediction markets. So I think DraftKings by the end of this year, $30 stock. Now, is that going to get us back to where we were beginning of this year? No, but that's good to see. That's going to be a substantial gain from here. 5 days, it's up 9.5%. For the month, it's still down. Pretty sure, yep, about 9%. So it's good to see DraftKings picking up some momentum. Analysts have actually raised their price targets from their investor day. So that's good to see. I am bullish on DraftKings, and I will continue to hold, even though I am definitely down over 10% in that holding. But I don't think I'll be down that much at the end of this year, and I look forward to that turnaround. my background's in the entertainment and casino industry. I think I have a pretty strong understanding of this business and what prediction markets are going to do to DraftKings. I think it's going to be something that they can play on offense, and they're not just investing in prediction markets for defense. So that's going to be it for me. Hopefully it provided some valuable information for you guys, maybe provided some comfort to you. I know talking about this makes me feel a lot better. Still sucks to lose money as far as options, but long-term investing, I know I'm going to come out ahead of that. I know I'm going to beat the market in my 2026 portfolio, my beat the market portfolio. We invest, and our goal is to beat the S&P 500's return on a yearly basis. We've done it the past 2-3 years, and we don't think this year will be any different despite the up and down roller coaster of the market right now. If you like this video, please like, please share, subscribe. You can also, in the link in the description, join our Patreon. There's a free version and there's a paid version as well. Hope to see you there. See you in the next one.